What is the stock exchange and how does it work? It is a giant, globally networked and organized marketplace.
Every day, huge sums of money are moved back and forth here. Over 60 trillion euros are traded annually, exceeding the entire world economy's value. However, it's not physical goods like apples or toothbrushes that are traded. Predominantly, it's securities, which are rights to assets.
These are mostly in the form of shares, representing a share in a company.
But why are shares traded at all? The value of a share relates directly to the company.
Think of it like a pizza. The bigger the company's value, the bigger each slice.
If Facebook, for example, increases its profits with a new business model, then the company's value, like the pizza, grows, and so does the share value. This is great for shareholders, as a share can increase significantly in value. When sold, this represents profit. Companies can raise funds by selling shares. They use these funds to invest or expand their business, like Facebook did.
Facebook earned $16 billion from its listing on the stock exchange.
However, trading shares is frequently a game of chance. No one can truly predict which company will perform well or not. A good reputation attracts investors, boosting a company's share value. Conversely, poor performance makes selling shares difficult. Unlike physical markets, the stock exchange deals only in virtual goods.
These appear as share prices and tables on monitors, constantly updating.
Share prices can rise or fall dramatically within seconds. Shareholders must act quickly to seize opportunities or avoid losses.
Even a simple rumor can cause demand for a share to plummet fast.
Of course, the opposite is also possible in the market. If many people buy shares, seeing potential in an idea, their value will rise. This rise in value is a direct result of increased demand. Young companies particularly benefit, generating cash to expand. In the best case, this transforms their idea into a successful reality. In the worst case, this leads to a speculative bubble. And like all bubbles, they will eventually burst, with nothing but hot air.
The value of Germany's biggest 30 companies is summarized in the DAX.
The DAX shows how these major companies and the economy are performing. Stock exchanges in other countries also have their own indices. All these markets together create a globally networked marketplace. This vast network facilitates the constant movement of capital worldwide.